Welcome back. SoftBank-owned Arm reporting declining revenues and narrowing profits in its IPO filing last night, bringing into question what the fate looks like for this company backed by SoftBank founder and CEO Masayoshi Son, what it will look like, what this big debut, likely to be the biggest debut of the year, has in store. Our Deirdre Bosa takes a closer look at his moves in today's Tech Check. Haiti.
LP, at the heart of this, Masayoshi Son, he has said that he wants SoftBank to lead the AI revolution. Arm could help that case, but right now, Arm's biggest market is smartphones, and that is in decline. That shows through in its financials. You mentioned it, shrinking revenue and narrowing profitability. And even a successful IPO may not make up for other potentially bigger missed opportunities. Perhaps the biggest AI black eye for Masa Son is his miss on NVIDIA, the undisputed AI winner. In 2020, SoftBank wanted to sell Arm to NVIDIA, but ultimately couldn't get it past the regulators. The information notes that it would have given SoftBank a $25 billion stake in the chipmaker that would be worth nearly $100 billion today, given NVIDIA's giant run-up this year. Now, that would have been a nearly four-fold return in just a few years, and far better than a doubling of Arm, since SoftBank bought it in 2016 for $31 billion if it manages to be valued at $60 billion when it goes out. That is the lower range of its reported target valuation for this IPO. Now, in fact, if Arm, even if it goes out at the top of that range, $70 billion, the return for SoftBank still underperforms the NASDAQ during that period. So even if you chalk that up to regulators, though, and say that, okay, this was out of SoftBank's control, don't forget that SoftBank bought a 5% stake in NVIDIA itself in 2017. It sold that stake a year and a half later for a tidy $3.3 billion gain, nothing to scoff at there. But had it held on, it would have been worth tens of billions of dollars. And given Masa Son and SoftBank's the AI credibility that they really need right now to go out and sell Arm to public investors. Now, of course, guys, Buffett says that in the long term, the market is a weighing machine. It is possible that Arm creates a ton of value in the public markets, maybe even rivaling that of NVIDIA. But at the moment, that seems far off. There's still a lot of road and uncertainties ahead. And Masa Son, remember, earlier this year, he said that he is going on the offensive for his strategy. He wants to invest again, but for now, he will have to play a fair amount of defense as he sells Arm's AI narrative, which at best I think is a little cloudy given that F1.
Well, and Deirdre, I'm just thinking about SoftBank's recent IPOs here in the U.S. WeWork, we know what happened there. Uber, we know what happened there. I mean, is this going to be different? Is there anything that they're doing differently to try and make sure it's a bit more successful, at least in terms of, the actual debut itself?
That's a great question, and it really underlines the idea that Masa Son needs a win. Sort of the freshest memories of SoftBank we have are WeWork and Uber barely trading at its IPO price years on from that IPO. I mean, he's kind of running the same playbook. If we take, let's say, the valuation in the private markets, that private transaction moving Arm from the Vision Fund to SoftBank, it was valued at $64 billion. That's within the range. That was back in 2019, according to a few sources. However, that is at the high range. You look at sort of the Wall Street notes. Bernstein says that Arm should be worth about $40 billion if you look at its comps in the public market. So he's shooting high, but have you ever known Masa Son to do anything otherwise? Sometimes it pays off. Alibaba, right? That gave him the reputation to even do this, raise $100 billion for the Vision Fund. NVIDIA could have been the second Alibaba, or at least come close to it, but it's sold out of that. So, he still has work to do, and hopefully he's hoping, certainly, that Arm can be that.